So yesterday was quite special. There was, I mean, generally I would have called it a market bounce sideways, which is what I predicted. But what I did not predict, what no one predicted, was the Japanese central bank announcement to expand its band on yields. So that really took the market by surprise and essentially signaled that the Japanese central bank for the first time ever really was scared of inflation, which sent the Japanese yen up, the dollar down, Japanese yields up pretty massively, and actually yields in general also up, which I also thought was going to happen, not because of the Japanese announcement. So we had some market moves as expected, some not. And gold and silver definitely not huge move to the upside. That's the problem with gold and silver. I mean that's why I'm in it, but it's also annoying to have gold and silver, especially silver, jump 5% when I'm trying to trade on the way down, and that's actually one of the reasons why I own gold and silver. You know, the black swan events. It's just now the chart looks a little different. So let's have a little recap. I'll start with the SPY. Now, the S&P 500 is basically curling here, and I thought it would happen, not because of where the S&P is on its own independent chart, but because rather where the NASDAQ and possibly the Dow is, mainly the NASDAQ. So S&P is curling. I expect today another sideways day. So essentially, not going below the low of day. I just expect it to just be sideways, maybe a small move up. This move up will be the last until the move down really takes it to 370 and even lower. So I expect, this whole move down was nice, a small curl here and then down. NASDAQ, this is really why I think the markets are bouncing or at least going sideways, because the NASDAQ's come all the way back down towards ascending support. So I do expect a bit of a bounce here. We closed within the ascending support. It's the close that counts. So again, a nice little sideways move. And then let's see the next few days back down again. Dow Jones, you can see it's curling also after retesting the descending line. So that's also on support. So it's really the NASDAQ and the Dow that are holding, I think, the S&P up. I mean, they're the ones setting the trend line. The Russell 2000, it's not in any support zone. I think it's just also like the S&P curling with the other two market, with the rest of the market. So for me, it's the NASDAQ and the Dow that is setting support. So what do I think is going to happen? Just a small move up, sideways up, and then let's see 1 or 2 days later back down again. The VIX, however, that is just, it's broken. I'm not reading the VIX anymore. It should have been, another sideways day for the VIX. Let's be honest, because these markets are just sideways, not even really moving more than a 0.5%, and there it is down 4% already oversold. So why would it be down? If anything, you'd expect it to be up, but makes no sense. Let's not even bother looking at the VIX. Let's look at yields now. 1 year, it's in the middle of no man's land. It's been between this neckline here and the all-time high. Let's call it. This section here. I might as well stick a big blue line because that's a very strong resistance. So I'm looking for a move to break out. 2 year, we're looking for a breakout of this descending line. Still not done yet. The shorter end of the yield curve is weaker at the moment, so I actually expect direction to be taken from the longer end. So look at the 5 year, broke out already this descending line. We're looking at a breakout of this. Still hasn't done it yet. 10 year, it did break out of its horizontal, so that looking strong. We're looking for a move back up to 3.8 now. I probably can do it soon. 30 year also took out its descending line and it's horizontal, moving back up. I mean, I'd say 3.9 is pretty much the next resistance, and it's not that strong resistance. So yeah, yields, the longer end is moving up. Now, Japanese, that's what happened to the Japanese. We're gonna have to zoom out because it's just wild. But big move there. Big move. Now, okay, Japanese, yeah, I mean, we've probably read about it, big move. It's really the yen rather than the yield. Well, it's the yields and the yen that matter. But look at the German yields. Look at the German yields. It's pretty interesting stuff. Sorry, let me just zoom in here. Now, let me just take the 10-year, right? That's what we're looking at in the American world, the 30-year, the 10-year, the 5-year. And now let's go back to the German. You see what I mean? It's the German yield, it came back, it went back to its sort of 1.8 zone. Let's just place this here, you know, took it out. This is when the yields were at their record highs. When I say record, I mean sort of local record highs. Came back down. The Germans were basically ready to sort of go sideways here and back up and test their all-time highs again. That ain't good for Europe. That suggests that suggests the old pattern of inflation is high and markets are going to go back down again. So watch out there. Italian, same thing. And the Italian yields, I mean, Italian debt is way worse than German. So as the yields go up, the debt becomes very difficult to sustain, impossible to sustain, impossible. That's when you get your pivot when the yields go too crazy, too high, too fast. So we're nowhere near a pivot, in my opinion, nowhere near, months away at least. So but system will break. That's the real point. The British, okay, they're a little lower because because they had a big fallout from yields going up too fast with the pension funds. So they really got serious. They didn't, we're going to cut spending. You're not going to cut spending, sending all the money to Ukraine and spending. The market just thinks they've gotten more serious than the other governments. But 30 and 10 years, that'll go back up eventually. But I think it's just interesting, and I haven't shown this in a while, the Italian 10-year and the German 10-year. And obviously, I'm showing it because what happened with Japan, but watch out, yields are going back up. This won't mean yields will go down in America just because maybe one or two are playing the other markets. Basically, yields are going back up. And this is something I thought would happen when we take out this descending line in America. But the point is, it's already been happening in the German markets, and I should have paid more attention to it. I saw it a few days ago. Interesting, but this time I'm remembering to put it in my videos. So just pay attention to that. Let's go very quickly to the currency. So the dollar index, that I was looking for a breakout of this descending line. It was underperforming yield, if I can say that. I mean, the yields had already taken their descending resistance out. The dollar hadn't done it yet, but with what happened with the USD Japanese yen yesterday, that's kind of delayed the breakout also. So you can see DXY was down yesterday. If I look at USD Japanese yen, look, that was the move. Ferocious stuff that definitely denied the breakout of the selling line. Now we're actually at the support I identified some time ago. I forgot when I put this in. You can see why it's here. It's this line here. It used to be resistance there, becomes support here, here, and now again here. So yeah, I remember saying 130 is a nice support zone. So let me just leave this here for now, just to make it clear. Although I don't like these blue ones, it's sometimes you zoom out and it sort of ruins the chart with some other chop that used to be visible. But anyway, that'll do for now. But that's quite adequate. Euro USD, yeah, I think it's going to have difficulty going here above 107. So I don't expect resistance to be taken out here. I still think, by the way, the DXY is going to find its bottom around 103, low 103, which is where it's found it so far. I think we've just delayed the breakout. We haven't changed the level at which it happens. The next level is down here, 101, basically. Yeah, that's it really. The pound, yeah, it's going to find a difficult time to rally, especially if it didn't rally much yesterday. So I think we're going to lose the selling support, come back down. So I still think the move back out, move back up in the DXY is expected soon. Just had maybe 3 days delay because of moving the yen. So that's the currencies. Now let's look at it's always stealing the show, gold and silver. Now I left all my markings in. I think this was going to happen had it not been for the Japanese news. But look what happened to gold. Right back at resistance here, 1820. Yeah, very, very impressive move. Very impressive move. And this is what you can expect when you get such a surprise announcement. Imagine the Fed announcement or something like that. Um, well, actually, it would be inverse if it was the Fed because it would send gold down. It's just gold went up because it was the Japanese yen that went up against the dollar. So, but anyway, the point is the gold loved it, went all the way up, and makes gold look very strong. 1820 breakout. See, now what happens is if we just sort of hold sideways here, you can get another move higher. I mean, for me, this type of chart pattern is very, very weak for the bulls. It's very difficult for the bulls to keep that momentum strength going and have a secondary breakout, if I can call it that, and take it to 1880. Essentially, that's where I think it would go. It's very hard still, but we're at the top range, so let's see. I'm not sure what will happen here because you kind of need the dollar also to fall, which I don't see happening. I don't see the dollar going down to 101. But when you have news like that where the whole world is on one side of the trade and it doesn't expect something to happen, you have so much money pouring in that you can definitely get these massive moves to continue. What happened with silver was even better. That was a 5% move. It went even higher than its old high. And now this area over here looks doable. I mean, I placed this little thing here to see how much we're 4% away from reaching what I think is tremendous resistance. And I really didn't think we would get there. And that's basically $25 on silver. And on SLV, I looked at SLV very quickly and drew the same trend line. That would be this mini gap fill here, basically 23 on SLV. For me, it's very obvious resistance. I don't think many people see this actually, especially, I mean, you have a lot of silver bulls out there. I consider myself one of them, but I definitely take a look at the downside too. And I just feel like it would be a really good place to sell. But I've sold quite a bit so far, and I really didn't enjoy yesterday's move. I mean, the account was up nice, but I was thinking about how much I could have made had I never sold all this move up. It's very frustrating when you try and trade it well and just sitting on your hands doing nothing would have maybe been better. I don't know, because I also bought, sold, and reinvested the profits I did do because there were lots of these moves. These are very, very profitable moves, buying and then selling and then buying and but anyway, it was I don't know whether I was happy or not about yesterday's move, but it was definitely interesting. Let's just see. Now I really think if silver comes all the way back down again, I don't think it can muster enough strength to go all the way back up and then go higher. I think it's asking too much. So I'm going to leave this here, this little picture, just move it to the right because if it happens, it happens later now. Same with gold. If it happens a little later. I still think we come back down. I hope it's not a strategy. I still think it happens because the general markets will move back down, and I think they'll take gold and silver with them. And also, if you think about the Japanese yen story, with the Japanese for the first time, honestly, for the first time in decades, being scared of inflation after it's already rampant. I mean, I've been to Japan several times, and you see these 10,000 Japanese bills. But just in general, you can see inflation, and it's been there for a while. Point is, how is the Fed going to justify a pivot if now the Japanese are scared of inflation? So some people saw yesterday's news and thought, oh, pivot is possible. Look, another central bank pivoted. Yeah, but maybe that was the wrong kind of pivot, actually. Let's look at the GDXs and GDXJ. That, nowhere near the highs like gold and silver. So for me, the point is, and a lot of silver bulls are trading the equities, right? I mean, they obviously own that silver. That's the point of the silver squeeze. But a lot of them are owning the miners, and the miners, they had a good day yesterday. You can see for some 0.5%, especially GDXJ, because that's a lot of silver miners in there. And that's mainly what I own, actually. Well, not anymore. I've sort of got about half, you could say. But, and you had silver mines up like 10%, Curl Daklen, EXK, all the usual, the best of the best that I hope that I own. But nowhere near their highs. And the point is, it's because they follow the markets also, and they've got that in there. They've got the market downside in there. So if the markets continue to go lower, because the general markets yesterday didn't care about that news really. They didn't go up. Definitely, that was a precious metal related rally. So if the markets go lower, as I think they're going to do, then the miners will be going lower down here, and therefore I win. Therefore, it was worth selling all of this up here, despite gold and silver looking so strong and justifying its special place. So I still think that will come all the way back down to a selling support here in the miners, despite these surprise bullish precious metal related news and moves. It's very risky for me to sell more. So I didn't sell anything yesterday, even though it was a big move day. I have some mines up 10%, but I didn't sell them because if I just move quickly down to the portfolio, and by the way, IAG, IAM Gold had a beautiful rally. I used to own that, not anymore. I don't even know the news, but it was a meaningful rally, 26%. But if you look over here, gold, I'm not going to go through the portfolio gold, Newmont, Pan America, especially for the silver boys here like Coeur d'Arlène, EXK, 10% and all that. It's beautiful, but I've sold this area up here. Why am I going to sell it here? I mean, it would be very good trading if it comes all the way back down and flushes to new lows, yeah. But I get a little bit more strategic when I have these kind of days and when I consider what I've already sold. So I didn't sell anything. I let it just sort of linger. Fortuna, for example, really following GDXJ well. You can see the chart pattern identical. I already sold up here near 398, 397. So why would I sell here? So basically I did nothing. I didn't trade the miners yesterday. So, and I've actually haven't traded for several days, and it's kind of annoying because you also had some rebalancing in the GDX, GDXJ the other day. So you had Mag Silver up sort of 8%, and the next day it's down 10%, and then the next day it's up 5%, and I didn't trade any of that. So, which is unlike me. It's just because I've traded this range, and I just want to zoom out and not trade it anymore because you don't want to overtrade. You can definitely overtrade, and I don't want to do that. So I'm just leaving this alone. I want to see a breakout higher. I don't want to see that, but I don't want to sell anymore until I see a breakout higher. I don't want to buy them anymore until I see a breakdown lower. And I think that'll take several days now because this range is pretty, it's 15-20% or something, and it's quite frequent that we hit both ends. And I don't want to get, don't want to be buying and then it flushes, and don't be selling and then it breaks out. Anyway, very interesting. So let's see what happens today. But let me know what you think otherwise, and good luck trading.